Hey YouTube, Brian Mahone here, certified cyber insurance counselor at EHD here in Lancaster and owner of insuranceformsps.com. This summer I had the opportunity to be a keynote speaker at the channel company's XChange security conference. It was in Frisco, Texas, and it's been enough time where I can release some of the content from it. So this is going to be part one of a three-part series of the keynote speaker presentation. It was 30 minutes, and we'll try to do it in the same amount of time here. So I'll make myself smaller, throw myself up in the corner here, and without further ado, we'll talk about what is cyber insurance. In the second part, we'll talk about how to leverage that to grow your MSP. And third is really where you want to get your notepad out, your pens and papers, and learn some tips, tricks, and best practices. So before we dive into what cyber insurance is, I wanted to talk about the insurance supply chain. And this was a slide stolen from Peter MacDonald. Shout out to Peter, owns a great insure tech company called Wunderwrite. And we'll start kind of from the bottom up. At the very top of the supply chain, we have, or I guess the bottom of this diagram, however you want to think about it, is the reinsurance carriers or companies. Munich Re, Swiss Re, they're writing insurance for insurance carriers to give them capacity and to share in losses. And the actual manufacturers, if you will, are the cyber insurance carriers. You might have heard of some of them like Chubb or Travelers or Coalition. They're the ones with the actual underwriters. They're the ones paying the claims. They're the ones tweaking their policy forms, and they distribute their products through a myriad of ways. A lot of cyber is flowing through what we call the wholesale insurance broker route. So your RT specialties, risk placement services, fifth wall solutions, Burns and Wilcox, Amwins, those types of folks, and they distribute their products often through retail insurance agencies. That's where I spent the bulk of my career now at EHD. And you might have heard of Goosehead or your local State Farm agency. There's about 40,000 independent insurance agencies across the United States. And then finally, they are working with MSPs and MSPs clients, the consumers, the business owners, the CFOs, and that's where the insurance supply chain unfolds in a pretty complicated way. And I think a lot of non-insurance folks don't typically understand this, and particularly security vendors. So moving on to kind of the nitty-gritty of terms and definitions, a lot of my value comes from knowing the insurance industry lingo and knowing enough of the information technology industry lingo to get everybody on the same page, right? So I often say that tech E&O is to MSPs what workers' compensation is to roofers, right? So MSPs have their professional technology service to protect their professional services. So if there's an act, error, or omission, that's where the tech E&O comes into play, and it's a financial loss coverage, right? And cyber liability is more for consumers, but also for MSPs, where it's again financial loss coverage, but to deal with the repercussions of a data breach. So protected information, PII, PHI, PFI. So not only do MSPs need this, but other companies like data storage companies, website designers, SaaS businesses, cybersecurity, IT consultants, all of them should have tech E&O as well. And as we move through the presentation, you'll realize it's more than just that. So getting into what is cyber insurance? Really, it's a panic button, right? These policies come with a 1-800-365 incident response hotline. So think of a doctor's office or an insurance agency or really any business these days that rely on technology. Often they're getting it through an MSP, and they have an incident and they're sitting duck. They can't access their agency management system, their electronic health record system, their emails, maybe if they're a manufacturer distributor, the software they use to track inventory and sell products. They often, if they have a good cyber policy, can call this panic button 365 incident response hotline. That's manned by a privacy attorney. Privacy attorney acts as the data breach response coach. They bring in IT forensics to figure out if that incident really was a breach, because a breach is a legal term. And then they help you with notification. Maybe you have 10 employees, but you have thousands of customers. How are you going to notify all of those people in compliance with your local privacy law? You want to smooth things over with your customers and potential future customers. So you're going to have public relations expense covered. And all while you're a sitting duck, maybe you're operating at a reduced capacity or no capacity, and you can't generate revenue. These cyber insurance policies actually pay business interruption costs. So as we move through the next few slides, you'll see in the columns here are different carriers and different metrics of how to compare them across the rows, or the x-axis. The one thing I wanted to point out is non-admitted versus admitted, right? So there's admitted insurance carrier. There's two marketplaces, right? Admitted, non-admitted. The admitted one is the United States, standard insurance carriers that pay the proper taxes and fees, and because they do that, they're backed by what we refer to as a state guarantee fund. And what that means is if your client has a claim and the insurance carrier goes belly up, like another 2008 type of situation, that claim will still be paid by the state guarantee fund. Non-admitted has no such guarantee. However, non-admitted doesn't pay those taxes and fees, so they can edit their forms a lot more quickly and broadly. They don't have to wait months and months and months to file them with their state insurance department. They also can get more competitive on coverages and pricing because of that. So it's quite common for cyber and tech E&O to be written in this non-admitted marketplace. You might have heard of Lloyd's of London or excess and surplus lines. That is a marketplace that acts more as almost like a stock exchange or risk exchange. They can insure the craziest things in the world. Think of Michael Jackson's feet, or Kim Kardashian's butt, or the biggest skyscraper in your town, and sometimes cyber and tech for MSPs. So a retention is similar to a deductible. It applies before a claim, and a deductible applies after a claim. And then there's a concept of first-party cyber insurance, right? So these are the insuring agreements that are going to protect me, the policyholder. I want to buy these things to protect me. So this doesn't always come with tech E&O, but really it should. So you'll kind of see some of the definitions and insuring agreements here. You have to watch out for a number of pitfalls with these coverages. On the contrary, tech E&O almost always comes with third-party cyber liability insurance. So this is things to protect you from your customers, your clients, your vendors, your third parties. So think, PII, PHI, PFI. You lost your customer's data and they're upset with you or suing you. It also is where the kind of third-party network security coverage comes into place, where because I had an incident, my customers had an incident. There was a gentleman at this conference that was running a smaller MSP that was hit by the 2021 Kaseya incident, and how horrible that was. So that was kind of a rare incident, but affected his third-party cyber coverage with his clients. And then finally, cybercrime. This is really the number one areas of claims right now. Invoice manipulation, social engineering, funds transfer fraud. So this is the classic, clicked on a link and voluntarily parted with funds, or threat actor gets into your system, starts sending out fake invoices to your clients, impersonating you, and your clients pay it. This is a really nasty area, and sometimes coverage can be picked up on a crime policy, but is often in a cyber policy as well. There's pros and cons to that. And this sometimes doesn't exist in cyber insurance or tech policies, but really you should always look out to include it. So I mentioned, there is no standard ISO form. Like, we know buildings have been burning down for hundreds of years. Most of these carriers have the same skeleton or core coverages on property insurance, and they compete with their bronze, silver, gold endorsement, and then their level 1, level 2, level 3 endorsements. Cyber has no standard skeleton or standard really coverages, which makes it a little bit troubling. Not to mention, it's only really been around 20 years or so since like the .com bubble. So there's really not that many cyber insurance specialists out there. And over COVID, we had a hard market where a lot of folks will say the cyber insurance carrier marketplace matured, but really we just went from not underwriting to actually underwriting. You used to be able to get quotes, pre-COVID, name, revenue, industry, here you go, decent terms, low premiums, and now, not the case. There's this concept of neglected software. I call this the IT guy asleep at the wheel endorsement. So you could have a good cyber policy in place, but there's a little hidden endorsements saying that, hey, if there is a common vulnerability, and typically these endorsements refer to the NIST database of common vulnerability and exposures, and if there's a critical one in there and you don't fix it, and in a certain amount of time, we're going to slowly decrease your coverage. So you go from having, $1 million of coverage to $500,000 of coverage because your patching cadence isn't up to snuff for your IT guys asleep at the wheel. So something to be aware of and something to ask about, really, when you're working with insureds from an IT patching standpoint. And most of folks buying cyber insurance really are buying it to have those post-incident service providers at their fingertips, right? So you're probably familiar with a ton of names on the screen, and this is just a sampling of panel providers from a leading cyber insurance carrier. And it's important to note that if you have a security vendor, maybe your favorite privacy attorney is your brother-in-law, or your team CrowdStrike instead of team Sophos or something. There have been times where MSPs clients have had an incident. The carrier brings in an EDR solution from one security vendor, and the MSP really prefers a different security vendor, and they kind of get pushed aside. So it's important that your preferred security vendors are proactive with working with these insurance carriers, but also that your clients or your insureds are negotiating these panel providers when they buy a policy, not come claim time. And a lot of times carriers are willing to accept a new vendor on their panel providers if you just ask nicely for no additional premium. In addition to post-incident service providers, a lot of these policies are starting to get a lot beefier on the pre-incident services they offer to mitigate risk. And these are kind of a sampling. I expect this to mature over the years, but really these things are coming in the form of a discount or free trial or 1-hour consultation. There is one carrier called Alpha Secure that's taking a little bit more of a stronger approach, where they're actually deploying MDR tools for all their insureds to keep them out of trouble. But they might have templates for data breach response planning, or a lot of these carriers are using BitSight as kind of a external vulnerability scan, and those aren't the most accurate, and they're good for someone that doesn't know anything about cybersecurity, but often they aren't accurate. There are solutions coming to the independent insurance agency space where we can start doing some internal scans and really start to help insureds out and reduce their premiums and risk. So from an industry perspective and a type of incident perspective, it's not a surprise those fraudulent payments are the #1 area of concern we're seeing. Social engineering, ransomware, system compromise, and then issues with biometric data and the Telephone Consumer Privacy Act are on the lower end. And they say riches are in the niches. Does your MSP specialize in a certain industry? If so, probably interesting to see that manufacturing is getting crushed. distributors, charities, nonprofits, government, education. Really, healthcare and finance have a lot of data, but they've spent the money. They have big budgets. These other industries with larger parts of this pie chart here, they have low cybersecurity budgets. They are new to buying cyber insurance. They are often lacking financial backing, I guess I'll say. Maybe they're funded by donations or grants or taxpayers. So they're being targeted more often. And this breaks it down just a little bit of a different way. And the interesting thing here is, what are the biggest obstacles to writing cyber insurance? And where MSPs can help is, a lot of these small business owners just don't understand their exposures, their cyber risk. And then once they maybe understand that, they don't understand how a good policy can fill that risk, or what coverage is provided. And then of course the cost is going up. And there's this idea that if you're on a board or in senior management and a company has a cyber incident and you weren't taking cyber hygiene seriously, that a cyber incident can actually turn into a director's and officer's claim. So kind of hinting at this 42% right here. And then of course, there's an incident in the news every day, and talk to somebody who's experienced a loss, and it'll rip your heart out. A lot of times these folks who have been working for decades say, it was the most stressful 2 or 3 weeks of my entire life, and I didn't sleep, and I felt like a victim. We lost a ton of money, lost a ton of customers. These are bad situations. And incidents globally are trending downwards. They obviously spiked during COVID, so we're back to like 2019 pre-COVID levels, and halfway through 2023, I'm recording this in September, we're seeing a small uptick, and really it's anybody's guess where the cyber insurance market will be. But what's nice to see is, the incidents are connected to the premiums. You kind of see the same shape, so to speak. There's a few ideas of why the market softened, I guess, at the beginning of this year. Better risk control, better underwriting. They are asking a lot of questions. They're using proactive scanning technologies. They're getting out of industries that are hit harder. There's more carriers entering the marketplace. Cyber insurance as a property and casualty product is the fastest growing property and casualty product in the world. So, all these carriers want a piece of that. There's some ideas with the war in Ukraine. Obviously saw a lot of cyber activity leading up to it, but perhaps some of those bad actors out of Russia are preoccupied with more traditional war than cyber warfare. And, of course that changes every day, I'm sure. So that concludes our first part here. Click down below. I'll link the second part to how to leverage cyber insurance to actually grow your MSP, which I'm sure you're all much more concerned about than the nitty-gritty details of policy language. Thanks.